What's going on, guys? Today I wanted to go over results for the month of January so far. So it's been my best month so far and we're only halfway through the month. So I want to show you guys some of that information, and then I want to get into kind of how I break down the upcoming week, what plays I'm looking at, kind of how I think about things going into the week, and then basically how we set everything up. Obviously it's a little preemptive because you never know what's going to happen when the market opens up. It could open way down, it could open way up. But at least this gives you some insight into what I'm looking at, and then I'll talk about some of the strategies if those things happen. So I appreciate you watching. If you like the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit the sub button. So it's always good to start by looking at how the market has been performing. So overall, we like to look at the S&P 500. So last week we saw kind of in the middle of the week, everything kind of spiked back up, and then inflation news kind of came out and everything fell back down. Inflation was much higher than people had anticipated. For basically the month of December, I think we saw around 7% is what the number came out to be. But overall, we're still basically in this kind of sideways market on the S&P 500. Where all the kind of volatility is coming from, though, is the small caps. So mainly we're looking at small caps, seeing where we have potential, seeing what stocks we like, and basically where we can get in at good pricing. So I did a results video on 2021. I did that back in December, so go check it out if you haven't already. Basically, I discuss all these charts and everything, but I wanted to point out is the percent return, the return on capital that we have here, we were kind of averaging between a 1 and 2%. We almost got up to a 3% in a couple months here in February and March. But then also I wanted to look at the premium. So the highest amount of premium we collected last year in 2021 was $365.98. So now let's jump over and actually take a look at what we've done so far just in January in premium and return on capital. Here you can see the results that I have for January of 2022. So here what we're looking at is all the trades that I've put on. We have the symbol, the expiration, whether it's a call, put, kind of the strategy that I'm using, the strikes that I'm at, whether I'm buying or selling it, and then the amount of credit that I'm receiving through those actions. So just looking at this first one, that's a SPY spread. It was at the 385 to 380, and we collected $26.68, and then we ended up buying it back for around $4.32. So that's kind of just looking at this chart. You can pause the video and look at any of these, but these are all the spreads that I've put on. And then here's where we've basically accumulated a large portion of the premium and done very well for this year. So we've looked and basically traded a lot of puts against smaller stocks that have had a lot of volatility. So you see SOFI in here, you have Hood in here, and then you also have PLTR. So I've made a video on this kind of before, but these are kind of the stocks that I'm targeting, as well as RKT, which is Rocket Mortgage. So those have a lot of volatility, and on some of these we actually kind of blew through our strikes. So we've rolled these trades out in time. I always put that in this front month because I'm basically trying to zero out this trade. I don't want this month to look overly good and then next month to look basically really poor. So you can see in here, those are the results. Some of the premium, so the overall premium that we have in here is $538.35. The problem with that is that's the total amount of premium. So we have spreads already in the month of February. You can see here, February 18th, we have a couple spreads on. Basically all of our spreads in February 18th in there. And that is contributing basically to this amount. So what we actually have to look at is over here, we have January, the total amount of premium. Basically that's just the sum here all the way down here. So what we're looking at so far for the month is actually $400 of premium, and like I said, we're only halfway through the month. So I have a couple more trades that I'm hoping to put on next week that I think we could probably get that closer to 500. So we're already almost $50 higher than our best month in 2021. So overall, everything's looking good, and return on capital, we're also much higher than we kind of have experienced in any of the months last year. So we're at 4%, and again, that's kind of considering 2 months right now, so that would be 2% kind of between the 2 months. But overall, for just this month, we're actually at a 2.17, which is kind of in line with some of our best months last year. So overall, really happy with the start of this year. So let's go ahead and get into some of the trades that I'm looking at for the next week or two. All right, so the first thing that I'm always looking at and always making sure that I manage is my cash. So in total, right now, we have $11,900 in cash. These are positions that we have on. So if we have a spread on here and it's a $5 wide spread, we know that we need to be able to cover that $5. So that's $500 that we basically have allocated to that position that's tied up there to make sure that we can cover it if it goes wrong. So the total of this comes out of these positions basically comes out to $7,050. So what that means is if we subtract this number from this number, we get $4,850, and that's the amount of capital that we have to work with, that we can either put on spreads, sell puts against, whatever it may be. And then I like looking at that as a percentage, and what that comes out to is almost 41%. So I like to maintain my percentage around 20 to kind of 30%. So we are going to look at basically putting positions on to make sure that we keep that number a little bit lower, especially because of the volatility that we're seeing in a lot of these stocks that we're already interested in. So next, let's look at some of these positions that we might put on this week. First up here, we're looking at RKT. So RKT is Rocket Mortgage. And what I kind of looked at when I was looking at the options chain is I'm looking 1 to 2 weeks out. So right now I'm seeing kind of a put around the 28th of January, and it would be at $13, and we'd only collect $30 basically in premium. So when I'm kind of looking at that, I look at the chart here and I'm seeing, right, that the stock is continuing to run down, but we've seen some kind of basically stability here at the $13 mark over the last 5 days. And then if you look at the last month, it's just kind of continued to bleed off and bleed off slowly. So that's definitely not long-term stability, but at least in the shorter time frame, we're seeing stability here. So I wouldn't mind basically selling a put there and being forced to buy at the $13 mark. But I don't necessarily love the amount of premium that we're getting from this. I think $30 for 2 weeks is kind of a lower amount, especially for the amount that the stock is kind of continuing to fall and the questions that there are with Rocket Mortgage, because as interest rates go up, we don't really know how well their business will perform. They're a relatively new stock market, basically company to the stock market. So I'm kind of a little more skeptical, and I already have some exposure to Rocket, so I want to kind of keep my position low. So I don't love this position right now, but it's at least something to look at. So next up here we have Hood. So this is Robinhood stock, and there's two real positions that stood out to me when I was looking over the options chain. So here we have basically the end of this week. This would be at the $15 strike. We would be selling a put, and we would be able to collect $54. So that's one position that's interesting to me. And then there's another one here that is actually 2 weeks out, and we'd be able to go a little bit further out of the money. So we'd be able to go at the $14.50, and we would be able to collect $90. So almost double the premium for a little bit of additional time and $50 less strike price. So both of these are interesting to me, and let's take a look here quick at Robinhood stock. So over the last 5 days, we've kind of seen it dip below that $15 mark, but then it keeps hitting kind of basically support and bouncing back up. So we saw that at the start of the week. We saw it dip down and then just bounce back up. And then we've seen it kind of dip down again, and then it kind of bounced up at the end of the day. So I did have a put originally sold at the $15 mark, and I was kind of like, oh, if I get exercised here, then I was fine with it. But then we jumped back up at the end of the day, and I didn't have to purchase Robinhood shares. So there's kind of a plus and minus there. I do want to hopefully get exercised in Robinhood. So I'm kind of looking at the money, and the reason I'm looking to get exercised is if you look at the last 6 months, right, Robinhood showed a lot of stability here around the $40 mark. And $40, the amount of upside, you're looking at over a 2x return on your money if it just bounces back up into this $40 range. So I see basically a lot of potential there kind of in Robinhood to the upside. So I'm hoping that we can kind of capitalize on that and potentially get exercised at one of these prices. So right now, this is definitely one that I'm looking at selling. It'll kind of depend how the market performs. If we shoot down a lot, then if we shoot down on Robinhood and it basically breaks through this $15 mark, then I might sell them at the money at $14.50 or even $14, depending on where we're at. just to kind of sell at the money and collect a decent amount of premium. So right now that would tie up $1,500 in capital if I make this trade that I'm kind of looking at right now. Here we're looking at Palantir stock. So Palantir, there's another two options that I was looking at. So selling the put for 1 week out, that would be January 21st at the $15 strike, and we would only collect $16 here. And then also looking at the 2 weeks out, so January 28th, selling a put at the $15 strike, and we would only collect $31. The biggest problem that I have with this is, right, let's look at the percent return. We know that the percent return, just comparing Robinhood to Palantir, we're both selling. Either way, we're tying up $1,500, right? So we can either collect $16 in premium, or we could collect $54. So that's kind of my thought process there, is why would I want to collect less money unless I'm super bullish and thought there was a lot of upside potential basically in Palantir? Then I might be more willing to take a lower amount of premium to basically expose myself to that potential upside. But in all honesty, I see more upside in Robinhood just based off where price has been on Robinhood compared to where price has been in Palantir. So what I'm getting at, right, is if we look at kind of the last month, right, Palantir is down kind of around $16, but it's showed a lot of stability around the $18 mark, just over a little over, basically around a month ago. And if you're looking at 6 months, you're only seeing it kind of around 23 up to even maybe $26, $27 in here. So that is not a 2x return. That is probably around 75%, just off the top of my head. I'd have to run the numbers to get a little more exact, but you're only looking at kind of a 70% return. So compared to Robinhood and compared to the upside that we just discussed, I don't really see a huge benefit in the small amount of premium that you're going to be able to collect here. So that's kind of where I'm leaning, not towards putting a option against Robinhood this week. And then the last one we have up here is one of my favorite stocks right now, and that is SOFI Technology. So SOFI, we again have two options that we're really looking at. So we're looking at potentially selling this week. That would be at the $13 strike. We'd be able to collect $36, or 2 weeks out at the $13 strike, and we would collect $59. So again, if we're looking at the premium here, we're actually able to collect more premium than Palantir, but a little less than Robinhood. So I'm a little bit more confident in SOFI. It's shown through its chart a lot of basically pulling back and then running back up to around the 22 to kind of $23 range. So I have a lot of confidence that it's going to potentially do that again. So I have a little bit more confidence, and I'm willing to basically sacrifice that little bit of premium comparing Robinhood to SOFI. We're looking at, right, $36 versus 54, or $59 versus 90. So I'm willing to kind of sacrifice that. The other thing that has kind of happened in the last week is a lot of banks have declared their earnings. So SOFI kind of falls into a similar category. So they've had good earnings. So I kind of expect that SOFI will continue that trend. So right now I'm actually kind of looking at this put, kind of having this put potentially, and then if not, we could trade 2 weeks out and sell this put. The weird thing that's in here is, right, this is 1 week out, and you're trading at 13 and it's $36. This is 2 weeks out and you're at the $13 strike again, but this isn't double the premium. So double the premium would be $72, right, if you double this number. So it's interesting that basically SOFI is almost showing, right, because you would collect less premium out here, that it wants to actually go up in price, right? Because the options chain is basically pricing SOFI further out at a lower dollar value. Because in theory, this should be twice of this value because you have twice the amount of time. I don't know if you kind of caught on to that. I can explain that more in a future video, but it's kind of an interesting nuance there. So again, let's take a quick look at SOFI chart, and we can kind of see, if we look at the last year, what I was talking about, where it keeps pulling into this $20 to $22 range and then pulling back into this $15 range. So I would love to buy shares here at what I would think is a deep discount, and then run them back up into this $20, $23 range. So I think there's a lot of upside there. In total, if we look at this, we're seeing that when we basically put these two trades on, we're actually going to take on positions that would be $2,800. And then if we go over here, we can see where that'll leave our cash balance. So that'll leave our cash balance. When we add this number to our 7,000, we get 9,850, and then when we subtract that from our 11,900, we only have $2,000 left in basically cash available, and that leaves us around that 20% mark in cash available that I mentioned earlier that I want to stick around. So I hope you enjoy the transparency here and kind of walking through my thought process on all 4 of these stocks. If you did, make sure you drop a like down below. If you want to see any videos like this, if you have any questions about any of this, just let me know in the comment section. Also make sure you hit the subscribe button, and I hope you have a wonderful rest of your day.